Roger, when's the last time the UN and World Bank and other groups like that publicly advocated that central banks around the world effectively stop increasing interest rates?
You know, I don't think anyone recalls that time. I certainly don't. It tells you that we are in a very complex situation across fiscal policy, monetary policy, and in particular with those two institutions worried about the impact of rising rates in the U.S. and other places on emerging market economies.
And how much influence does the UN or World Bank making such a public statement have, you think, on the Federal Reserve, on a Jay Powell? It seems, when you look at the green on the screen right now, and I don't know if it's because of the UN or not, but I think that the view has shifted such that there's so much fear now, perhaps, in the economy, that the view is that maybe he's going to let up a little bit.
You know, I don't think it's going to have that much influence. You know, at the end of the day, Jay Powell has said what he thinks is the right thing to do, which is to raise rates maybe higher than markets had expected, keep them there maybe longer, all of that to drive inflation down. You know, and none of these institutions have really spoken to whether or not that has been achieved. You know, Jay Powell said that there's a possibility there'd be pain. He moved away from the discussion of a narrow path to a softish landing. So I think this is basically all part of what is to be expected whenever rates are starting to tighten.
But, Roger, when you look at the quote, fear in the marketplace, we've talked about Credit Suisse, we've talked about what's going on in the UK, for example. By the way, even in Australia, they increased the rate less than had been anticipated. Is all of this a sign that maybe things went too far, too fast?
I think it's a sign of a couple of things. One, obviously, the UK had a special situation of poorly executed and poorly communicated fiscal policy by a new government. You know, I think that is a unique situation. I think what's going on in markets is they are building up an expectation of some sort of pivot, which I personally believe is premature. You know, the job of markets is to anticipate, and I think they're anticipating something that would make their lives better, so to speak. But the Fed has said that, you know, one of the things it needs to see is a tightening of financial conditions, which means, frankly, markets probably not rallying as much as they have, and interest rates, you know, maintaining some of the levels that they had recently and not falling off. So I think there's a bit of a disconnect between the hope in the market versus the reality of the Fed.
So when you see the markets up on a day like today, you think that is hope? Hope is not a strategy, and that's the strategy at this point?
I think so. I think markets have, there's a lot of swirl in markets about Fed pivot, et cetera. There will come a point when the Fed will certainly slow down. As you point out, the Reserve Bank of Australia did that. It feels to me as though it is premature at this stage. We have not seen the kind of easing in the labor markets yet that the Fed wants to see. We have seen some weakening in the most recent manufacturing numbers. That's not surprising. We'll see what the data tell us. But at this stage, I think the market is sort of projecting its hopes and fears onto the Fed. And I'm not sure the Fed shares those hopes or fears at this moment.
Where, if you were to throw into this stew the situation with Credit Suisse and the fears around that bank, where would that lie in things?
I think that's a separate, independent matter that has to really be understood by the regulators. The question, you know, some of this got started with tweets and activity in social media. Then their CEO put out an internal memo that I thought was balanced, but maybe people misread it. So I don't think that you adjust the monetary policy in the United States of America because of the uncertainty around, you know, a market player, which, if it is true, has to be dealt with in a different way.
Right. We will be getting jobs data this coming Friday. Do you have any expectation of what that data will suggest? I know it will be backward-looking. We were just discussing that.
I don't think markets have softened up that much. So I would expect, if we're lucky, we'll still see a slight improvement in labor force participation rate. I think the unemployment rate may move up just ever so slightly, but I don't think it's going to be the signal that, yes, we've finally gotten that softening that the Fed needs to be confident that inflation is clearly moving significantly, with a clear and convincing evidence toward the 2% goal. I don't think the system, while it is softening, has softened enough for it to play through that much.
Shepard Smith here. Thanks for watching CNBC on YouTube.